Hey Iguana family, it's Iggy. Today, we're diving into Singapore Exchange's FY2025 results. If you invest through the SGX or plan to park money via CPF or SRS, this one matters. Why? Because SGX just posted record revenue and profit while laying out a clear dividend growth roadmap. I'll take you slide by slide in plain English and show what each page means for your portfolio. Quick credibility check so you know who's guiding you. The investing Iguana ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We crossed 1 million reads and 58,000 likes. I've produced over 1,000 videos and 600,000 watch hours as of August 2025. I cover regional and global trends, but always bring it back to your Singapore portfolio. Today's deep dive, SGX's FY2025 results. Stick around to see what it really means for your money. Here's the plan. We'll start with top line and margins, then segment drivers and volumes. We'll zoom in on cost discipline, earnings quality, balance sheet strength, the dividend path, medium-term guidance, strategy, and capital allocation. I'll flag risks, lay out the opportunity, and give you my call. Buy, hold, or sell for Singapore investors. All right, let's jump in. All right, let's look at slide 1. Group net revenue and expenses, foundation, and operating leverage. Here's the headline. Net revenue rose 11.7% to 1,298 million. Adjusted expenses grew only 1.6% to $543 million. That gap widened margins. Adjusted operating margin moved up to the high 50s, and adjusted NPAT margin ticked higher too. Think of SGX like a toll road. Traffic rises, costs don't rise as fast, profits scale. That's operating leverage. Why this matters to you? Strong operating leverage means SGX can lift dividends without starving the business. For CPF/SRS investors, you want steady cash returns plus resilience. This is that. All right, slide 2. FY 2025 net revenue up 11.7%. Revenue bridge by segment. The bridge shows where growth came from. Equities cash was the biggest driver, thanks to higher trading activity and a mild fee uplift. Derivatives contributed across equity, currency, and commodities. OTC FX added another chunky lift as volume surged. Platform and others benefited from co-location and data repricing. This is SGX's multi-engine airplane. If one engine slows, others can keep the plane at altitude. For us, that lowers earnings volatility. That can support a higher valuation multiple over time because the market pays up for stability. Slide 3. FY 2025 highlights. Volume pulse across SDAV, DAV, and OTC, FX, ADV. Volumes are the heartbeat for exchanges. Securities daily average value, SDAV, rose 26.5% to 1.34 billion. Derivatives daily average volume, DAV, was up 17.2%. OTC FX average daily volume jumped 28.5% to use 143 billion. When activity rises, clearing and trading fees rise. And because the platform is already built, margins expand. Question for you. If activity normalizes, do margins crash back down? Likely not to old levels. Scale effects usually leave you with a higher floor than before, especially when client adoption broadens across more products. Slide 4. Total adjusted expenses up 1.6%. Cost buckets and discipline. Even with higher bonuses, SGX kept adjusted OPEX growth at 1.6%. Staff costs reflect performance. Tech spending remains sensible, with a guided increase next year to modernize systems. Depreciation and other costs stay controlled. This shows management is walking the tightrope. Invest enough to stay competitive, but don't bloat costs. For investors, that discipline helps preserve the margin gains you saw earlier. It also makes the dividend outlook more reliable. Slide 5. Adjusted NPAT reconciliation. Clean core earnings. Reported NPAT was higher due to one-offs like fair value gains and a disposal. After stripping those and amortization of purchased intangibles, adjusted NPAT landed at 610 million. This is the number to anchor your valuation and dividend coverage. It removes noise and shows the true engine. Why it matters. With clean core earnings, you can compare SGX to peers fairly, model EPS with confidence, and gauge payout safety. It keeps expectations honest. Slide 6. Robust financial position, low leverage, high interest coverage. Gross debt dipped from $728 million to $688 million. Leverage ratio moved to 0.8x. Interest coverage jumped, showing more than enough capacity to service debt. For you, this means optionality. SGX can pursue bolt-on M&A or weather a quiet trading quarter without touching the dividend. It's the safety net we want in a core Singapore holding. Slide 7. Dividend policy and path, sustainable and growing. Here's the sweetener. Proposed final quarterly dividend, 10.5 cents. Total FY2025, 37.5 cents, up 8.7% year on year. And the plan is to increase dividends by 0.25 cents each quarter from FY26 to FY2028, subject to earnings. It's not a reckless promise, it's a glide path tied to growth. The visibility is rare. For CPF/SRS planning, predictable quarterly steps help you map cash flows. Slide 8. Medium-term guidance, the 2-3 year base case. Management guided for 6 to 8% revenue CAGR, excluding treasury income, expense growth of 4 to 6% in FY 2026, and CapEx of 90 to 95 million for tech modernization. They expect OTCFX to be a mid to high single-digit % contributor to EBITDA. What should you model? Mild fee rate tailwinds and cash equities, faster growth in FX and currency derivatives, and operating margins holding in the high 50s, even with the tech spend. Slide 9. Strategic growth, the cross-asset flywheel. The strategy is clear. SGX wants to be Asia's primary access venue. T+1 settlement supports trading velocity. New products like micro-contracts expand access. Cross-border corridors deepen liquidity pools. More clients use more products, which drives stickier relationships and higher revenue per client. That's the flywheel. Product breadth, client depth, volume, margin. As a Singapore investor, this matters because it shifts SGX from local exchange to regional flow hub. That broadens the addressable market and reduces dependence on any single segment. Slide 10. Capital management. Growth, future-proofing, returns. Capital allocation focuses on organic growth, future-proofing tech, opportunistic bolt-ons, and a sustainable dividend path. The hurdle for M&A looks sensible. Spend where it compounds. Defend moats in FX and derivatives. Return cash with discipline. This is the playbook you want for a market infrastructure business. Quick pit stop for our Substack call to action. For even more granular data, detailed financial models, and a full written breakdown of this SGX FY2025 report, including an extended valuation analysis, check out our Substack. The premium post pairs with this video and goes deeper into segment-level margin math and peer comps. Link is in the description. Now let's synthesize all of that and get to the portfolio call. Iggy's overall assessment and investment implications. Based on this report, SGX is a buy for Singaporean investors right now. Here's the rationale. First, diversified revenue engines, cash equities, derivatives, and OTCFX. That mix lowers volatility. Second, strong operating leverage, revenue up, cost controlled, margins higher. Third, balance sheet strength gives flexibility for M&A and cushions the dividend. Fourth, a credible dividend ramp, small quarterly steps tied to earnings through FY 2028. What about risks? Watch regulatory changes in global FX and derivatives. Monitor serious interest rate shifts since treasury income can move. Keep an eye on competition from regional venues. And be mindful of geopolitical shocks that hit cross-border volumes. The mitigants are SGX's multi-asset mix, product innovation, and client stickiness. How I'd position it in a Singapore portfolio for CPF or long-term SRS, SGX fits as a core. Consider a 3 to 5% weight if your goal is a blend of growth and income. Reinvest dividends for compounding if you're building wealth. If you're drawing cash, the predictable step-ups help with planning. Let's wrap up with a quick summary and a strong call to action. SGX delivered record results with clear operating leverage. Growth is broad-based across cash, derivatives, and FX. Costs are controlled, and the balance sheet is strong. The dividend path is predictable and rising. Strategy and guidance look credible for the next 2 to 3 years. For Singapore investors, this checks the stability and growth boxes we want in a core holding. So we've dissected SGX's FY2025 results, and I've given you my personal take on what it means for your investments. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $3 a month, about the price of a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today.